This is some serious stuff happening in the banking industry. Do you attribute any of what's happening to inflation, which was engendered by all this spending and $32 trillion in debt? Because that's a lot of people think that's where inflation, the root causes. I mean, there was a supply chain. There are a lot of reasons for what we're seeing right now, the reopening. But do you attribute it? And if so, maybe we need to do something about the debt during these talks.
Well, look, I mean, obviously the banking crisis in part is related to inflation because the rates went up.
Because the Fed had to go up 500 basis points.
And individuals in these banks are saying, oh, I can get 5% in a money market account, so they're moving it. These banks, some of them didn't hedge against the long-term bonds. But here's the situation with the regional banks, really simply. Look, if you're in the big four banks, you know that money is safe. If you're in one of these regional banks, you're not that sure. And the question this country has to ask is, do we want to be like Canada and France and have 3 or 4 banks? Or do we want to have a bank in Youngstown? Do we want to have a bank in Anderson, Indiana? They're going to be obviously a little more risky because they can't diversify. They have to lend to the regional economy. I think it's a good thing we should have those regional banks. And that's why I've said that we need to cover we need to guarantee deposits in business accounts across the country and charge a small fee for that.
We get a lot of I guess we have to ask you. So it doesn't look like good timing to me with your First Republic. I guess you have a blind trust or something that someone else handles for you, that when First Republic was already down 80%,
yeah,
it was sold. So can you respond to that? Because people say, ask Khanna about his trading.
Well, so it's not my money. It's my wife's money. It's in a blind trust. It's diversified. And they had some sales, which was after the stock was already 80% down, and it was at a loss.
Do you think at this point, from what you can tell, that this is over? We were talking basketball. Let's talk baseball. What inning are we in? Is it a doubleheader? Are we in the 8th inning of this crisis? Are we in the 2nd inning? What do you think? Is there more to come with all this duration risk?
I hope that the worst is over, but until we guarantee depositors or have something to do that assures depositors in regional banks that they're going to be safe, I think these crises could keep coming up. And even the FDIC said that yesterday. They said, we've got to reform it. You've got all these deposit accounts over $250,000.
Right. What do you do?
Well, my view is you say any account over $250,000, we will guarantee, but we're going to charge you a small fee on it, 0.05%, 0.1%, and that fee then goes to the FDIC, and they use that to insure these.
Is that enough? If you were to put a fee like that on it, is it enough? Because the FDIC already is below what they are required to be holding in terms of capital. They're supposed to have something like 1.35% of all assets that they cover. And as of the end of the year, they only had 1.27%. Now, that's a function of how huge deposits have become over the pandemic. But if you were actually to put those same standards on big accounts like that, I'm not sure that level of a fee would actually raise enough, because that's just covering up to $250,000. If you're actually talking about all deposits, trillions and trillions of dollars, I don't know that that's even enough to meet up to the FDIC standards that, by the way, were put there post Dodd-Frank.
So there's about 10 trillion that's insured. There's about 8 trillion that is uninsured. And 0.05% fee on 8 trillion would be quite a lot. And the risk of a bank,
1.35%.
But we can figure out what the exact fee will be. The point is, if you are in a bank and you have that money there, you should pay something. Now, here's what people say. They say if you guarantee all the deposits, you're going to take moral hazard because these banks are going to take more risk. The reality is, though, the shareholders still get wiped out. So the bank still isn't going to get wiped out.
Didn't stop any of these banks that we've seen to date, which it seemed like they were reasonable banks until very recently. Maybe the regulators weren't looking as closely as they should have in a rising rating environment.
Yeah, but here's the philosophical question. Look, the Bank of Youngstown is never going to be as safe as J.P. Morgan. I mean, they're not going to have the same risk assessment. They can't diversify in the same way. But do we want 1,000 banks in America? I say yes. And I say yes, there's a slight higher risk if you have 1,000 banks than if you have 3 banks.
You just said something which to me is sort of the beginning and end of the discussion, which is, as long as you believe that the Youngstown Bank is not as safe as J.P. Morgan, why would you bank there? I mean, under what concept, right? Unless they're going to have higher, I mean, because there's 2 things. They're going to give you a higher rate better rate? And how are they going to give you a better rate and pay for this insurance at the same time? I mean, that's the other piece of it, which is JP Morgan can actually afford to pay the insurance component. Whereas actually, if you're a small bank, it makes it so much harder.
Well, right now, though, JP Morgan has an unfair advantage because.
But they're always going to.
Well, because they have the guarantee, so they can get away paying almost 0% interest while they're getting 5% at the Fed. If you guaranteed those local banks,
guarantee because they're too big to fail, you mean?
Right. They have if you guaranteed the local banks, at least they'd be on a level playing field. And then maybe someone other than JP Morgan would want to buy them because they know it's a safe investment. But yes, it's higher risk. I mean, I think we should be honest that having 1,000 banks is probably a little bit higher risk than having 3 banks. But do you want, I mean, we already have, just yesterday I read in North Carolina, there was a paper mill that shut down in this town. 4,000 people in that town. Guess how many folks work at that paper mill? 900. That's wiping out the town. And you're telling me at a time where we've got small towns sort of having manufacturing leaving, resilience leaving, that we want to just get rid of the regional banks? I mean, it would be catastrophic, I think, in this country.